So let's be talking about the revaluation of PPE and where we recognize those gains and losses. And let me give you 4 things to consider. First of all, that the revaluation gain always results in a cash inflow. Secondly, that the revaluation gain always results in a gain in equity. And thirdly, that the revaluation gain always results in a gain to P&L. And fourthly, none of those statements above are true. Let's have a look at it logically one by one. Does a revaluation gain always result in a cash inflow? No, it never results in a cash inflow. A revaluation is not a cash transaction. We debit the asset on a revaluation and then we credit a profit. And the question is whether that profit, whether that gain should be in P&L or whether it should be in equity. And the answer to that second question is that it depends. So although the default is that we recognize a revaluation gain directly in equity, it is possible that we recognize the gain in the P&L if it is reversing a loss that has been previously recognized in the P&L. And so in order to understand that, we need to think about a revaluation loss, because revaluation losses are normally taken to equity, but they will be taken to the P&L once you've exhausted a balance on that account relating to that particular asset. And so the actual answer to the question is all of those statements are not true. It's not a cash inflow. We don't always take revaluation gains to equity. We don't always take revaluation gains to P&L. Now, maybe I should make up a small example with some numbers to illustrate the principle. And let me use land that is accounted for under ACCA 16 PPE. So if we've got some land which originally cost us 100 and we revalue it to 105, we've got a gain of 5, and that gain of 5 would be taken to equity, would be recognized in other comprehensive income. But if at a later date we had revalued that land to, say, 99, then there's a loss of 6 because it's in the books at 105. We're now saying it's 99, there's a loss of 6. You can take that loss to reserves, but only to the balance of the reserve that has been previously recognized. So only 5 of that loss would go to equity, would go to other comprehensive income, and the further 1 would be charged to the P&L. So now we've got an asset in the books at 99, and let's, in a subsequent accounting period, revalue it to, say, 120. So we've got a gain of 21. Now the first gain is reversing a loss that has previously been recognized in the P&L. So the first gain of 1 is taken to the P&L. So whilst we're debiting the asset by 21 to bring it up, the credit is to P&L by 1, and then the further 20 is taken to equity. So I hope that numerical example really enforces your understanding of how we account for revaluation gains and losses in respect of PPE under ACCA 16. Please like, please subscribe. Thank you for listening.